Hey, what's up guys? I'm Ori with BPB, and today the question I want to answer is, what is a real estate investor? It's actually a really important question to talk about and to answer because it's actually very easy to get started in real estate investing. And once you understand how easy it is and how simple it can be, then you can start to help make that identity shift and say, hey, maybe I am a real estate investor, and that identity shift can help drive some momentum in your investing career. So let's just break that question down. What is a real estate investor? So the first part, what is real estate? Looked it up on Google, just make sure I had a good definition. Real estate is a property consisting of land or buildings. So real estate, property consisting of land or buildings. Now, what is an investor? An investor is a person or organization that puts money into financial plans, property, etc., with the expectation of receiving a profit. So typically when we think of investing, we think of the stock market, right? We put money into the stock market, we buy certain shares of a company. Over time, the value of that company increases, we sell those shares and we make the difference, right? And so the same principle applies to real estate investing. A real estate investor is just anyone who puts money into the financial plans of property, land, or buildings and expects a profit. So there's two main strategies in real estate investing, and that is cash flow, that's monthly cash flow, and long-term appreciation. So typically cash flow is more of a shorter term strategy, and appreciation is a long-term strategy. So appreciation, we'll start with that one, that's a little more simple. That's when the value of the property increases over time. So for example, you buy a house, it's $100,000. You wait a few years, it increases by $50,000. You sell it for $150,000. You just made $50,000. Now, it is important to note, that's not just straight $50,000 profit. Buying and selling a house, there comes a lot of closing costs. There might be some repairs, things like that. So, there will be some taken out of that $50,000, but that is an example of appreciation. The next strategy, monthly cash flow, is when you own a property and then you rent it out, and you rent it out for higher than what your mortgage is on that property. So for example, if I buy a house and my mortgage on that house is $1,000 and then I rent that house out for $1,500, now I'm making an extra $500 a month. Now, same as appreciation, that $500 extra a month, there's a lot that goes into that. You are the owner of that property, so you have to maintain it. You're responsible for taxes, insurance. If the refrigerator goes out, you have to repair it. If the roof goes out, starts leaking, you have to repair it. So all of that money comes out of that monthly cash flow, but that is the basic principle. So there's a wide range of people who are real estate investors. You don't just have to be a businessman with a lot of money, suit and tie, building a ton of houses, right? You can buy a house, live in that house, and then rent out part of it, rent out a room, and now you're a real estate investor. So there's some simple strategies we're going to talk about down the road to get started in real estate investing. But remember, just to recap, a real estate investor is anyone who has a financial plan and puts money into land, buildings, or property expecting a profit. So I hope you guys have a great weekend. I'll see you next time.